So markets are once again hitting record levels. The S&P 500 has closed at a sixth straight all-time high, while the NASDAQ has actually soared to its 14th record close in July alone, even as the Dow Jones edged a little bit lower. But beneath all of this euphoria that's going on right now, there are clear signals of rising vulnerability. And I want to focus in on that and what you can do to build and protect your wealth during that time. Hey, Ty Lasater here. I'm the managing partner of Lasater Capital. And together with my brother, we've built a private equity portfolio that now exceeds $600 million in real estate, on our way to $2 billion. And I'm telling you right now, there has never been a better time in all of my lifetime to go all in on real estate. Look, I got started in this game before the 2007-2008 financial crisis. And I personally watched that correction unlock one of the absolute greatest wealth building cycles in modern history. I experienced it, I witnessed it firsthand, and I was a direct beneficiary of it. But the opportunity that's forming right now, it's even bigger. But what I want to tell you is, here is the truth that most people are missing out on. The winners in times like these aren't the ones that are sitting alongside on the sidelines waiting for that perfect moment to come about. They're actually the winners are the ones who are preparing right now. They're acting right now and positioning their capital early, while everyone else is still debating what's going on in the headlines all around them. Look, I'm telling you, this is your moment right now, and I don't want you to miss out. Investor optimism is being fueled right now by a newly struck US-EU trade deal. And this reduces tariffs to 15%. It calms trade fears, and kicks the NASDAQ and the S&P even higher. But while the Dow slipped modestly, down just, I think, about 60 to 64 points, it's about 0.1%, while the other benchmarks started to march upwards. And they're driven by big tech, by semiconductors, and by energy names, much like the Tesla's multi-billion-dollar chip deal that they have going right now. These are the things that are leading this charge. But despite everything that's going on, market internals and market valuations are flashing clear warnings. There's few immediate tailwinds that remain. And apart from the easing trade tensions, now is the opportunity. Valuations have stretched, reminiscent of the bubble territory that we saw earlier in 2025. There's little macro events that are looming, upcoming tech earnings from Apple, Meta, Amazon, Microsoft, and the Fed rates decision and key inflation on jobs and data are coming up. And they're gonna make changes. And late summer, early fall is historically seasonally vulnerable in the marketplace. So here's what the opportunity is right now. Unlock gains right now, put profits in your hip pocket and take advantage. Take some of the earnings off the table that you've built in the equity market right now, and start reallocating into physical assets like real estate that are offering counter-cyclical ballasts to what's gonna happen in the market. So unlike stocks, real estate tends to hold value and sometimes even appreciate amid market corrections, especially if interest rates start to stabilize or fall like they were talking in the Wall Street Journal this morning. While equity rise, physical assets and properties aren't as exposed to the stock market volatility. So rental income and tangible equity provide both income and resilience to a big shift in the marketplace. So if you've captured some meaningful gains from this rally, now is the time to crystallize on them, to monetize on them. You don't need to liquidate everything. I'm talking about a partial shift from your equity portfolio using earnings into real estate or other physical assets that offer diversification and ultimately downside protection. So to sum this up, the market has been great and it's been on a tear, but streaks do not last forever. The pending Fed's decisions, earnings surprises, and traditional seasonal volatility are creating risk. So take some profits now, hedge with real assets, with physical assets, and be ready for what comes next. Okay, you've got momentum on your side right now. The markets are high, sentiment is glowing, valuations are elevated, and there is uncertainty that is still looming in the air around the earnings marks, the Fed's policy, and trade negotiations right now, especially with US and China talks ahead of us facing in early to mid-August. So take some gains now. Doesn't mean missing out on what could still come. It means protecting what you've built and growing with it, compounding it. Pivot into real assets that offer a hedge against a potential correction, and they provide tangible income and stability. So check me out for more, follow along, and I look forward to working with you at some point soon.